Well done. The numbers are in. We can see everything in front of us. It is about the sustainability of the loan losses. Have we passed the worst as we go into, as Anne-Marie has monitored it, lockdown 2? Do you think we've passed the worst on your provisions? Can this momentum continue?
Yeah, well, good morning. Regarding the cost of risk, we are confirming our guidance. For the full year, around 70 basis points. So definitely the low range that we indicated to the markets. And I must say that when I see the stability of the absolute amount of NPL, the quality of the portfolio, we remain exactly consistent with our previous view. 70 basis points for this year and a lower cost of risk next year.
Good morning there. COVID is one of the major stories. The other, of course, is the election. You've done well in your credit structured product trading, your equity trading. A lot of this was based on volatility. Do you think volatility will continue, or now that we are nearing closer to a potential result in the United States, that volatility will start to calm down?
Well, listen, we will see. Certainly what we are doing is going beyond the short-term evolution of volatility. We are effectively adjusting our risk appetite on our investment solutions, and I'm confident that quarter after quarter we will see the results of that policy with resilient contribution of our market activities as reflected in the third quarter.
Frédéric, the whole world is focused on whether we're going to go into a period of chaos in the United States, of legal challenges to the presidency. Are you taking any reduction? Are you reducing any of your trading books? Are you reducing any of your exposure? Are you making any moves to shore yourself up for perhaps a chaotic 2 to 3 months?
Listen, we are obviously taking into account the short-term potential risks. But as I've said, beyond that, and we announced that to the market beginning of August, we are adjusting our risk appetite for our structured equity and credit product, the investment solution that we sell to the clients. And effectively having designed a range of products where if we had to face the similar crisis than the one we had with the first lockdown, we would have an impact which would be more than divided by 2. So if you wish, we are in this, we are moving forward with this structural risk adjustment. And again, I'm confident that we will have put this, the kind of event we've had in the second quarter behind. So it's a structural adjustment beyond managing the very short-term evolution of the markets.
Right now, where things stand in the United States, Biden has 264 electoral votes. President Trump has 214. Biden being able to win Wisconsin, being able to win Michigan has really put him on a path closer to that 270. I just want to ask you, from where you sit at the top of a major bank, how would banking regulation compare in the United States from a Trump administration to a Biden administration?
Listen, I think U.S. bankers would be much more better positioned than myself to comment on the difference. It seems that maybe Mr. Biden would be a little bit more demanding. But I'm not sure at the end of the day if we see the overall outlook of the election that there will be so much change. And I guess that in most regions, governments will be also very keen to see their banks able to finance the economy, finance the recovery, finance the growth plans put in place by the government. So I don't expect so much change in the very near-term future.
Frédéric, the company, as you say, having put the second quarter horribilis behind you, but the stock is still down over 50%. Do you think SocGen is exposed in this market? Are you potentially exposed to a takeover? How do you look at your position in this potential consolidation story in Europe? Do you feel exposed? Do you feel vulnerable? Your stock's down 50%.
Yeah, but in a European banking sector, which is also down very significantly, and we have, and I heard the people commenting on this from the industry, we have this big issue on the capacity to pay the dividend, which is certainly the major factor which explains why the European banking sector is down this year, and I think to valuation, which makes no sense actually compared with the long-term potential of the banks. So no, I don't think so at all. And the priority of management, is to manage the crisis. On our side, there's a lot that we can do to better reflect the value of our assets. You mentioned yourself that our net profit is more than twice higher than the market expectations. That shows that we can do much better than certain people think, and it is really the priority to implement all our different projects, ensure resilience in this crisis, and beyond take into account some structural trends, evolutions that this crisis is accelerating. I have two in mind in particular: the digital transformation, which remains key for our sector, as well as the energy transition.
Indeed.
And these two movements will be the long-term ones to deal with.
Frédéric, the market is going to be very focused on anything that you say about dividends. What can we expect in 2021? If that was the nemesis of European banking this year, are we going to get a regular dividend from you, an extraordinary one to replace this year, cash scrip? Give the guidance to the market in terms of what is reasonably expected from you.
Listen, first, we will, of course, wait for the decision of the supervisor. What is very important is our Core Tier 1 ratio. Our Core Tier 1 ratio stands at 13.2% at the end of the third quarter. It gives us a 420 basis point buffer above the regulatory requirement we have, which means that we have definitely a lot of flexibility, and we will manage our capital in order to remunerate at some point, depending, of course, on the decision, duly our investors.